All right, everyone, welcome back to another episode of Everything Business. Thank you for joining. Right, today we'll be looking at the general journal. In my last uploads, right, well, we have been looking at the books of original entry. I would have looked at already the purchases daybook, the sales daybook, the returns inwards daybook, the returns outwards daybook, and the cash book. If you have not gotten to a chance to watch those videos, then you can check those videos out. Right, you can just type the names in the search bar and you will find my videos on those. All right, so let's go right into what the general journal is about, right? And it is the second to last book of original entry that we will look at. So let's get right into it. So the general journal is really like a diary, an accounting diary, right? That is really used to record pretty much anything. However, there are certain pointed uses of the general journal, right? And you have to know them. For example, the general journal is used to record opening entries and also closing entries. However, closing entries are not so much tested at the CSEC level, right? So we'll be looking at opening entries in this video. Also, the general journal is used to record purchases and the sale of fixed assets on credit. It is important that you note that I said on credit, right? And fixed assets, right? So that part is important. Fixed assets on credit. It is used to record correction of errors, but we will not look at that use in this video because that's a topic by itself in CSEC accounting. It is also used to write off bad debt, right? And we're going to look at that as well. And it can be used to show the double entry, right? To record other items as needed, as necessary. It can be used to show that as well. All right, so let's get right in. All right, so let's look at some of the uses. So for example, opening entries, right? So the instruction is to use the general journal to record the following entries, and you are given some opening entries, you are given some assets, right? Fixed assets along with current assets. So if you look, you will see premises, motor van, fixtures. These are all fixed assets. Stock, debtors could be called accounts receivables, right? And then, bank and cash, these are also current assets. Then we are given the liabilities, and there is a principle that you have to use to record these information in the general journal. Now, if you look at the general journal, you will realize that the general journal resembles any other type of journal, right? However, instead of having a note column or an invoice column, we have debit and credit columns, right? Remember what I said? It is a journal. So really and truly, what the journal entry, what the general journal shows is really what you debit, what you credit. So you're basically chronicling what you're doing, the accounting transaction, what you'll do, what you'll debit, what you'll credit. So it really describes the double entry. So if you look at what we are doing here, when you're recording information, especially opening entries in particular, you start off with the fixed assets first. So you see I have my fixed assets here, and you will realize that my fixed assets, they are located in the debit column, right? So it shows that these accounts carry debit balances, fixed assets, which is pretty true. Then our current assets, which are stock, debtors, bank, cash, also carry debit balances, and that is the reason why they are in the debit column. See that? Now if you look at my creditors, right, which are the liabilities, right, it is indent. That's the first thing. It is indented, which means that I move away from the margin a little bit. That is how you treat your liabilities. You move away from the margin to indicate that these are liabilities, and also the fact that they are in the credit column because these accounts carry credit balances, right? The thing about the general journal is that when you're finished and you balance off the general journal, the debit column should be equal to the credit column, pretty much like the trial balance, right? Yeah. So the debit column is supposed to be equal to the credit column. If that's not the case, then you know that something is wrong. All right. And so in questions, they will give you the assets and they'll give you the liabilities, right? or let me say some of the liabilities, right? Well, the liabilities, and then now you will have to now balance off the general journal. How do we balance off the general journal? We follow the accounting equation, right? Now, if you look at it, we have assets, we have liabilities. The accounting equation has three elements: assets, liabilities, and capital. So then what is missing from this? It is capital. So if we have to find capital, then we have to subtract our liabilities from our assets to find our capital. So in this case, we are going to try and find our capital figure. So the capital figure, so let's sort this out a little bit so that we can show our capital figure. All right. And you also indent for your capital. Capital account will be in the general ledger. We don't know what the capital figure is as yet, but we are going to find out. All right. So you're going to use a calculator, pull out a calculator, right? And you're going to add up your assets. So when I add up my assets, I have 2,000 plus 450 plus 600 plus 1,289 plus 40 plus 180 plus 1,254 plus 45. That gives you 5,858. 5,858, 5,858. All right. Now, if you look at the liabilities column or the credit column, you realize that that is 260. So it's going to be 5,858 minus 260, and that would give us 5,598. That is the difference between both of them, 5,598. So that would be our capital figure. And now both sides would be equal. So 5,858. Both sides would be equal to 5,858. And that is really how you balance off, right, your general journal, right? You would double line that. So that is how you record opening entries, right? Pretty simple, nothing too difficult where that is concerned. All right, you can pause the video, go back and look at what I did, right? And you will be fine. Now let's move on. Now, how do you record the purchase and the sale of fixed assets on credit? Now, if you look at this transaction, right, it says on June 5, we bought motor van on credit from Toyota Incorporated for 1.5 million, right? Now, let's record that transaction. So you go with the date first, June 5, right? Now, when you're recording entries like this or transactions like this, you're going to put what you will debit first, the account that will be debited first, and then the account that will be credited. So that is what you do. Pretty much like what we did earlier on, where we put the accounts, or we list the accounts that are debited first, and then we list the accounts that are credited afterwards. So you're buying motor van. So obviously motor van would be debited, sorry, right? So motor van, and where would you find that? In the general ledger. So it will be debited, so you go 1.5 million. Right. And then the account that would be credited in this scenario would be Toyota Incorporated. Very good, very good. Right. But then when you're making the credit entry, you have to indent, right? Remember? You make the credit entry. So Toyota Incorporated, they would also be in the general ledger, right? So it is 1.5 million. And when you're doing the general journal, you have a thing that they call a note or a narrative that you will put here, right? So you can say motor van bought on credit, and you may say, sir, why do we need this? Why do we need this information? Right? Now, this information is needed, right? You know, just to show or to explain what the transaction is about, right? So that is the reason why we need this narrative that we call it. All right, so let's move on to the next transaction. So the next transaction here is June 8th. So you start off with writing in the information. So June 8th, right? It says sold drilling machine on credit to OGS Drilling for $2 million, right? Remember the principle. We start off with the one that is debited first. So if we are selling a machine on credit, right? Then it means that the person who is buying the machine is receiving the machine. So OGS Drilling would be debited. So you have OGS Drilling, they will be debited. Their account will be in the general ledger. The amount is what, $2 million? Yeah, so $2 million. So just try to let the figures be as realistic as possible. And remember that when you are writing in the credit entry, you indent, so you go sales, right? Well, you wouldn't go sales, my bad, right? You would go machine, right? Drilling machine, because it's a fixed asset, so you wouldn't put sales. Sales related to goods, all right? So just remember that. In the credit column, you have $2 million, and you put the narrative again. Drilling machine sold on credit, and that's it, all right? And now we can balance off our general journal, and this would be what, 3.5 million. So 3.5 million, and it's the same thing on the the credit side, right? So now we can just double line it, bam, and there you have it. Right, we have completed making these entries into the general journal. So let's move on to the next use of the general journal, which is writing off bad debt. Pretty simple stuff, guys. So if you look at writing off bad debt now, same principle would apply. So a bad debt is really when a debtor is unable to repay their debt. So accounts receivable, they are able to repay for whatever reason, right? And so you write it off as bad debt, right? So let's look at it. Bad debt is an expense to the business. So let's register this one. So June 15, right? NRD is unable to pay this account, right? So we would start with the debit, the account that we debit first. So bad debt is the account that we would debit because it's an expense to the business. Again, that is in the general ledger, and that is $40, right? And then we would go with the account that is credited. So you go N Hardy, right? He's a debtor to us, therefore his account would have been in the sales ledger, and you put that in the credit column, right? And you can put a notation there. You can say bad debt written off. All right, remember that the notation is just to help maybe other bookkeepers who may take up your journal and look and wondering why, you know, this transaction is there. The narration is just to help them. And so if you realize both sides are the same, 40 and 40, and you just underline it, you double line it to balance it off, just like that. All right, and so it's, as you can see, general journal is pretty simple to do. It really doesn't get much more difficult than that. All right, what they will do in the exam is they will put all the transactions together that you could record in the general journal. So you just have to know that, okay, this is how you do it. All right, so join me in my next video. My next video will be on petty cash book, right? So you don't want to miss it. Remember to like, subscribe, share, leave a comment, right? When you like, when you subscribe, when you share, help the video push forward. See you in the next one.